My name is Jessica Salinas. I'm the VP of Investments at New Media Ventures. We're an early stage seed fund that invests in activists and entrepreneurs who are addressing democracy's biggest challenges. And I also serve on the board of Plug in South LA, the incredible organization behind this conference. Yeah, go plug in.
Yes.
We are so honored to have all of you who are right now in this virtual space for what will undoubtedly be an insightful conversation with my friend, Beatriz Acevedo. And Beatriz, before we start, is it okay if I call you Bea?
Yes, of course,
Okay.
of course. I get called everything. I've even got called like Patrice, Catrice, Catrice. So Bea is perfect, amiga. Anything will do. I'm not picky, but I like Bea.
And as we wait for people to settle in, I actually have a quick story for you about the first time that I met you that I actually don't think that you know. It was 2016, so I know you definitely don't remember.
Wow.
And I had just moved down to LA for business school at USC. And I was experiencing a bit of, I would say, a culture shock in that I was fresh off the heels of working with professors at the Stanford Business School. And we had started this program, the Stanford Latino Entrepreneurship Initiative, that, was meant for Latino owned businesses to scale their businesses. And I had co-authored this first research report around the systemic barriers that exist that prevent or stunt the growth of Latino entrepreneurs. And then there I was in business school in these courses that were sharing these business cases on the best entrepreneurs and on the blueprint for starting the business. And none of the business cases, none of the entrepreneurs that were showcased were Black or brown. And not shocking. And I actually had the opportunity to go to the offices of Me Too in Santa Monica, the company that you founded, and which I'll mention later on, and hear you speak to a small group of people that were working on startups. And it was brief, but seeing you, this fierce Latina at the helm of this company in Silicon Beach, leading this organization that was so important to the Latinx millennial culture, was really critical for me at that point. And now, here we are.
Here we are. Oh my gosh. And I thought first time we met was at our mutual friend's Mike de la Rota's office, but it's great to know that we met before then.
Yeah.
Well, I've been a fan ever since I met you, Jessica. You've been doing this work before it was cool or woke or any of these new words to do D&I and the real hard work of how do we invest more equitably into our community. So thank you for all the work that you've done for so many years. You've been such a pioneer. I've personally benefited from the Stanford scaling program. I was cohort 7, very proud. And I still do a ton of business with the colleagues that I met there. Amazing. So you planted an excellent seed there.
That's what it's all about, and you're still here being this fierce Latina entrepreneur. And now you're building the next digital tool for the Latinx community, SUMA Wealth. So I'm going to cut straight to it. Tell us about SUMA.
Yeah, sure. Well, listen, I didn't think I had another startup in me for startup founders. You guys know it's a hard grind. It's not for faint of heart people. So after Me Too and, racing up to a Series D, I thought this is it for me. I'm not a young founder at all. And I thought I have 2 more years before my kids go to college. So I'm going to do my philanthropy and be a mom. And that lasted just for a few months. So during the pandemic, just taking a look at how hard our communities of color have been affected, not just by deaths, but also with the economic downturn. And the information that was out there, even to get a PPP loan for people to understand what was to be furloughed, what your benefits were. I really wanted to find a company that would explain it to us in a very easy and culturally relevant way, because people were very, very confused with information. People were like, oh, but it's in Spanish too. I'm like, no, our community speaks English, but even if it's in Spanish, it's hard to understand. If it's in English, it's hard to understand. So it started with an Instagram page, which is crazy, just like giving out, information on how to help accelerate the recovery in our communities. And as you know, We are the cohort that spends the most, which is amazing
Yep.
for brands. Crazy bad for us when it comes to building generational wealth because we have no emergency savings, no retirement savings. So yeah, great that we spend so much, but we really need to start, getting into our culture and into our DNA that we should also be that stat of people who save the most and invest the most as well. So I couldn't help myself, and I started this company called SUMA Wealth. Never would have thought in a million years that I would have been leading a fintech company. I don't come from the world of finance. My co-founder, Javier Gutierrez, does. And you guys know I'm a marketing girl, I'm a
Yeah.
community builder. And he was like, that's exactly what we need, right? Like, community should be first, and really demystifying finance for people. So here I am, what it is a wealth building digital platform, to accelerate economic power for our community. And our big goal is to help close the wealth gap. So big, lofty goal, but I feel that if I can contribute just a little bit to that, I can die in peace. So super excited to have the opportunity to lead and build a company that, potentially could do incredibly well, but that its mission is to do good in our community. So very, very proud, super exhausted.
I'm sure.
But excited. Yeah, I've been here on my computer. This is my dining room table, everybody. So I've been, building the company, taking Zoom meetings, talking to investors that I've never met, hiring people that I've never met, all in this room.
That's amazing. And exhausted, I think, is a fitting word, and I'll tell you why. Project Diane releases their biannual study on venture capital and specifically women's access to funding. And their report last year told us that Black women and Latinas are raising more venture capital funding than ever before, which is great and makes sense since we are the most entrepreneurial demographics.
Yeah. Launching the most companies, yet the lack of capital is ridiculous, right?
Yet we make up less than 1% of all venture capital investment. And we don't even know yet the effects that the pandemic is going to have on those numbers. So you've now managed to raise venture funding twice for two different ventures, which is incredible. And this time you managed to raise over $1 million in 2 weeks in the midst of a global pandemic. So break it down for us. How did it happen?
Listen, it's nothing that I did personally that was extraordinary. I think there's a few factors. The most important one is that I raised the money from women who understand and really see the potential in our community, right? So I didn't have to oversell them of why we matter, why we need to close this wealth gap, what's the demographic, what are the numbers. It was just, here's the idea, the stats, the numbers, this is what I want to build. And they're like, great, I'm in, right? So that made that happen quickly, and what it seemed like effortlessly. I did not have to be overselling why our community matters, or over explaining that not all Latinos are immigrant, not college educated, old, watching soap operas, etc. They got it. I was just like, it's Gen Z, it's millennials, as enrolled in college, ready to invest, ready to, make that change. They've been the sort of like the guides of their families for so many years, right? Like they've been translating that American ethos for their family members, literally and figuratively. Some of them say I bought my first car at 12, and that's true because they've been translating all these terms for their parents or their grandparents or their aunts and uncles, tios and tias. So that made it incredibly easy. So when people say like, oh, what has to change in the VC ecosystem? Well, you just need more people like us that get it, that get you, that get the problem, that get the market, that get the opportunity, that see the potential. So there wasn't a magic, thing that I did. It was much more like you raise from people who are like you, who look like you, who get you, and who see the opportunities. And I think that was what was incredible. Now, I had never had a female investor in my previous venture. Not that I didn't try. I had no diversity and no women. And, I didn't know. There's so many learnings, right, from one company
Yeah.
to the other. So on this one, it wasn't that I thought I want a lot of women in my cap table, but I certainly was very mindful of, I don't want to take money from people that my gut tells me, even though in paper it could
Mm,
look good, that I shouldn't, right? And that's definitely a privilege to say I'm not going
yeah.
to do it, because as we know, that stat of the 1%, for me, it's a little bit lower, because for immigrant women and for immigrant Latinas, it's 0.36%, right? And I guess if you get to the
Yeah.
ageism, probably that goes down, right? Like a founder over 50. So anyway, I don't know what number I am. Very, very low. So
Yeah.
to say no is definitely a privilege and a big risk that you take. But I think in the long run, it's super dangerous to raise capital from somebody that you already know it's not the right
Yeah.
partner, or that your gut is telling you run.
Yeah. You mentioned a lot of important gems, so I'm going to try to break them down.
Okay.
So the first one that you mentioned that I thought was really important was that there was nothing that you did personally that was extraordinary. I think that's an important point to call out, because it shouldn't be extraordinary. We
Right.
shouldn't have to be extraordinary to raise $1 million. There
No.
are white men doing this in a matter of seconds, and it's not extraordinary. So I think that's really important that you called that out. The second thing is the importance of community, and how it's important for you to raise from other women, other people that understood and looked like you. I know I shared this with you earlier this week, but I think DocuSend released a report, and they said that they had that investors spent 200% more time on a woman's or female founder's business market than they did on any other page, and that they did on, which means that they're questioning the market, and probably because of exactly what you said, they don't understand it, right? That they're not looking at how much the ask is, the revenue. They're looking at the market,
Right,
and questioning it. So that's really important. And the third thing is the red flags, the investors. Can you break that down a little bit more? Because like you said, there's kind of this scarcity of money, or perceived scarcity of money for female founders, at least from what the stats tell us. But you're saying you have to be careful. You shouldn't take all money. So break it down for us.
Well, I always say not all money is the same, right? And there's a lot to that. On the first part, yes, it's who is the right investor that is aligned with your mission and with your values and with your vision for the company. That is super critical. And I don't think I guess I never heard that when I raised for my first venture. I was just grateful that people were willing to give me money. I was a first-time founder. I've never raised capital. I had no idea even what it meant, and we'll talk a little bit about that later. So I just took the money, right? And I was, lucky that some investors were incredible, and to this day continue to be amazing mentors of mine. And yes, they are white men who are great mentors and supporters of mine. So I do want to call that out. And there were others that were completely misaligned to what I wanted to build and to want to do. And it comes out because they'll take a board seat, right? And there'll be a lot of microaggressions on things that you say or you think. And I've always had a lot of swagger, I'm going to say. Like, I credit my parents for, telling me as a little kid, you could be anything, you could do anything, and like pumping me up with like a lot of self-esteem. And I have to say that the hardest moment in my life, not just as an entrepreneur, but just as a human being, questioning my worth as a person, even were in those moments, right? In those board meetings where I would say something and it was like, I wouldn't say stupid, but, very implied that, whatever it is. And what's very interesting is that you fast forward to today, and every suggestion, everything my gut told me, that's where the business would have been unbelievable. And listen, me too as well. It's now profitable. It was sold. All good. But we could have accelerated that many years before, when you're like, hey, direct to consumers, like that's down, paid subscription, that's down, because the views will be lower. And at the time, you get it. Those were the valuations and that was the playbook.
Yeah.
But there's a lot of things that I always say, who you take capital from is the hardest decision you should be making, or a co-founder. That's also another one that I learned the hard way, the co-founder.
Yeah.
Anyway, so who you take is almost as important as who you marry, or more, right? And I'll tell you why. Because when you, and I'm married to my co-founder of Me Too, not of, so I know that. But when you marry somebody, hopefully you love them, and, little things that start annoying you, you're like, okay, kind of compensates with a love. But an investor, I mean, maybe you love them, but it's not the norm. The things that start annoying you is like, oh my gosh, it's like that little stone in your shoe. I don't know if there's a saying there in English, but in Spanish it's like esa piedrita en el zapato that just is so annoying. Or it's just like that movie of Sleeping with the Enemy. Like, everything you want to do is wrong. Everything you want to, move forward is not going to be moved forward. So it's a very big price, right? That you're like, okay, I'm going to take this capital, but then what? Like, you have to think that it comes with a really heavy price. And I didn't know at the time that you could do due diligence on investors. Like, at the time, like I was saying, like I came from media, I came from entertainment, I self-funded my previous companies. It wasn't a thing to need venture capital to be a producer. But here for Me Too, we definitely needed that accelerated growth with the money from venture capital. So even on my first meeting that I had, I knew one person in the whole industry. I knew nobody in venture capital, but Peter Chernin, who had led Fox, I knew him from my producing days, and he knew me. So I was able to secure that meeting. And I remember being in Peter's office and him saying, so are you guys looking to raise a Series A? And I was like, I had no idea what a Series A was. I was like, yeah. I mean, it sounded like that was the start of the alphabet. So I was like, yeah, we're going to raise a Series A for $3 million. Like, that should have been like a seed, right? Or a pre-seed.
Yeah.
But I didn't know. So you're just like grateful, right? Like, he was like, sure, here's my money, and I believe in you. And, Doug, my co-founder, my husband, because he knew us from our TV days. But then after that, we were just excited that it was like trick-or-treating on Halloween, right?
Yeah.
People are like, yeah, here's our money. And we're like, oh, we take it. Thank you so much for this opportunity. Just being grateful. And then it came with we never did due diligence. We never asked other founders, hey, how is this person to work with? How are they on the board?
Right.
Are they supportive? How are they when you don't meet the numbers, right? Like, because they're all great when you exceed the numbers. But what happens then? I never did that. So I'm always telling new founders, like, definitely do your due diligence on people that want to invest in you. And I know it's tough, right? Because you're like, when I was now racing for SUMA, people are like, oh, but you've raised $52 million. The investors, they know you're a second time founder. I'm like, yes and no, because I never raised a pre-seed. Those are very different investors. And it was in media. This is fintech. Like, there's no investor that I had from Me Too that I have now. So I was very scared when I was at Me Too. I didn't know the stats. So sometimes it's better to not know, I guess. I don't know. Because I used to walk into those VCs with so much swagger of like, I would look that everybody was the same. And I was like, listen, nobody's a woman. Nobody's a Latina. No, I've got this. Like, I felt super empowered for being the only one, I guess, where most people feel very intimidated. For me, it was like, I've got this. Like, they know nothing about my community or what I bring to the table. So I felt really good about it. Going into SUMA, I knew the stats. I've been at the conference. I knew I was an outlier. And I was like, oh my God, I was so scared. I'm like, I have no relationship with these people. I got to do it all via Zoom. I can't rely on like the energy in a room. I mean, to be honest, I hope none of my investors are listening. But my first question would be like, who would give you money to do a fintech? Like, what do you know about fintech? Right? Like, So I was very, very scared, to be honest. And so to say no to a few of the first ones, it took a lot of guts, but I'm happy I did.
You dropped a lot in that. So I'm going to go back to a few points that you made. you touched on this a little bit around how you how you diligenced investors. You said, ask other founders where if you're new to the space or if you're starting in the space, what would you say maybe are the top three things on how to assess an investor are?
Yeah, I mean, listen, I do it now, even with investors that I'm just going to meet for the first time, right?
Yeah.
And I think it's easier once you have the relationship with other founders as well, right? Because you're like, okay, who's invested in this company? And then, the questions for me are the questions that are important for me, because something that might be critical for me for an investor might not be the same for someone else. So
Right.
the things that are important to you, right? Are they going to be are they going to be supportive when things don't go right? Right? Like that is critical, because that's very telling in those boardrooms of like, what's their strategies going to be once have they ever participated in a bridge round when, you might needed extra equity? How much have they contributed also to the business? Because that's the other thing, the dead weight investors. Yes, you want the capital, but there's also the intellectual capital that they can bring. And that could be transformative for a company. You don't only want, I had an investor, no names, who was in telco, and they invested in us in every single round, right? And they were lovely people. Like they would just come to the boardrooms. They would never question anything. They would never say anything, but they never contributed in any sort of way. And we tried to give them the insights of our community for their telco, which is very important because 90% of our community is mobile first. Yeah. And we did marketing campaigns with every single one of their competitors, except with them, right? So we're just like, there's just no relationship. There's no contribution. And then you have the other investors who are like, what do you need? Who can I connect you with? So aside of the money that they're putting in, those additional contributions, those introductions, those connections are really, really important. So think about both things, right? It's the cash, right? The capital that they're investing, and they're sort of like their contributions as to the business.
Their value add. Yeah,
exactly. So that's another question that I ask, just because I've been in a place where it's like very dead weight, right? In a boardroom or in a cap table. And some people like that. They're like, listen, I don't want anybody to tell me what to do. And for me, it was more the contacts, the connections, but I do like people's point of view. I do like feedback a lot. So if you like that, then obviously that's another question to ask. But whatever is going to be important to you as you run your company, how hands-on are they? Some people are like, I don't want anyone from the board to be, looking at it. I don't mind it. I have board calls every month, right, with my board. And I love it because I love to show off what we're doing in the company. Or whenever I have a challenge, I also want their point of view and I want their guidance. So whatever is going to be important for you, you want to make sure that those investors are sort of aligned with the way you want. And it's hard for a founder to be super honest. So you have to read the signs, because why? The investors send you these. I sometimes just do it on my own. I Google who they've invested in, and then I'll cold call because I know them. But sometimes you ask the investor, who can I talk from your founders, from your portfolio companies? And they pick somebody. What was really funny is that some of them picked me, and I was like, oh my God, how do I tell this founder run, right? Like in a smart way, because the investors send them to me. But there's ways, right? You're just like, well, listen, if you like a very hands-on approach to your so-and-so, or if you like to, so read the signs when you do the due diligence, because they might not say he's horrible or she's horrible, but ask the questions where you're going to be able to just use that intuition of like, what are they really trying to say?
Yeah, I think that's so important, because there definitely is a power dynamic that still exists within the venture capital industry of investors and founders and entrepreneurs, and especially when a lot of those investors are white and then the founders are Black, Latinx, Indigenous. So it's really important that we're real about it, right?
Yeah.
And that we can almost in a way like protect each other from
and prepare yourself,
and
right?
Prepare.
I recently had a meeting with an investor that's a little controversial. And I asked a couple of the founders, right, about this particular investor. And they were like, listen, it's going to be really like brutally honest. Like
Mm.
they'll be like, you know, your business plan doesn't work. This isn't this.
Yeah.
But in their heart, like they're good people, right?
Yeah.
And their insights are great. And that was exactly it. But I was prepared emotionally
Yeah.
for that. You know, I was prepared emotionally for the tearing down. And it
Yeah.
was one of the most incredible conversations I had. I mean, the insights that I got, were priceless. And to this day, I'm still, emailing and like, how you doing? What's happening? I wasn't racing, but, it's good to also know what's their style,
Mm-hmm.
right? Like what's the, how do you sort of prepare for that? If you're up for it, obviously.
And what are red flags for you with an investor?
Oh, the biggest red flag for me is that they don't get what I'm doing, that they don't get our community, right? And it's going to be different for any kind of founder. That was the first no I gave to my first actual Zoom call, pitching an investor that I didn't know and he didn't know me. I think I spent over an hour explaining Latinx to this guy. And not the term, but he was just very focused on, it's normal. People who are not Latinx, I guess they just assume, oh, okay, Latinos, they're old, they're uneducated, they're poor, they're immigrant, they don't speak English, etc. So I spent a lot of time explaining to him why the demo that I was super serving was the younger, Zillennials, Gen Z, millennials, and why they were sort of these ambassadors or Sherpas in their families, and why I could get to the 60 million Latinos if I hyper focus on them, who are the influencers, right? So as they become parents, they can change the narrative within one generation with their family. But as they are those navigators or those chosen people in their family, they're also creating incredible influence on the older generation. So I'm like, let's focus on them and like totally empower them, give them the tools, give them everything that they need. And he was like, oh my God, that's fascinating. So I was giving him the numbers of like, it's only 19% of the Spanish DOM of US Latinos. Well, people think it's a majority. So I want to focus on the 81%. Like every stat, it was probably an hour. He was like, oh, do you have more time to explain this to me? I'm like, yeah. And super passionate explaining the demo. And at the end of the conversation, he's like, well, listen, I think a good idea for you would be to go get customers at the consulates. And I'm like, the consulates of where? Right? Like I explained for an hour that these are US born Latinos. And he was like, yeah, like El Salvador and like Honduras. And I'm like, oh my God, dude, you have not heard anything I said in the past hour here.
Wow.
So I was like, like, oh, we'd love to invest. I'm like, no, pass. And that was the one where I was like, oh my gosh, who am I to be passing? Like, I'm so over my head, founding a fintech company. Like, this is so arrogant. You question yourself because you're like, should I take it? But I was like, the one regret I have of my previous company was I did not follow my gut enough, right? I didn't. And I promised myself that this go around, I would honor my gut. I look at the data. I do my due diligence, but if at the end of the day, there's something in me that says it's not sitting well with me, I promised myself I would honor it. So that was my first, I'm like, yeah, thanks, but no. And I had zero money, right? Raised at that moment. And then all the other money came from all female investors, which was amazing and such a blessing.
Wow. I think we need to get that printed on a shirt. Honor your gut.
Yeah, exactly. It's tough. It's tough. I mean, especially if you know the data, you're only so lucky that somebody's gave you the meeting, that they're interested, that they made you an offer, that is a good offer on paper, but there's something in your gut that I'm like, I'm always going to have to be over explaining to this guy who we are, why we matter. What's the difference between the demo of immigrant versus US born? Like, no, I don't want just the money. I want that brain power. I want somebody that gets it and contributes, to the growth, and that it's personal to them, that this audience succeeds, that these customers build their wealth. So I just didn't feel that was the right.
And there's so many other implications of that, right? And I know we speak about this, but the implications of dilution. Can you touch on that? When you have so many offers and you're so excited, but there are tangible implications to your business.
Yes. So absolutely. And this was new to me too, because I had never raised a pre-seed. Like we said, my previous one, I started in an A. which should have been a seed, like we said, but not knowing, I thought A was the first part. Anyway, so here it was a pre-seed, so it's like, oh well, it's going to be a safe. So yeah, I'm not really giving equity away, right? Like it's okay. And I wanted to raise $500,000 only. I thought this should be enough for me to do this test, see if it works. I'm very also mindful of other people's money. I heard another founder the other day saying, yeah, like, what do you care? It's other people. I'm like, oh, I care more than if it was my money. That's the thing that I
cultural thing, I think.
I don't know. But also if you look at who's on my cap table, right? Majority of the investors are Latinas on their first and second funds. You want to do well for them, right? Like, I'm like, oh my gosh, it's such a responsibility. But other women of color on my capital and other women who are incredible supporters of mine. So right there, you're just like, I want to deliver for them. I really do. Right. I don't take fundraising lightly. So I thought with 500K, I can prove my theory that was working already, but it was only an Instagram page. And that's it. Now I had a lot of it's always the hardest to the first person that comes in, right? So I'm super grateful to Samara Mejia from Chingona Ventures. That was my absolute first check, followed by Ana Barber, who is also an incredible friend and mentor. And both of them were like, no, we're investing in you. We believe in you. Another cultural thing. I was mortified when I heard them say that. I'm like, no, don't invest in me. Like I felt very anxious about that, right? Like investing in me. No, invest because you think the business is good. Right. So once you have your couple first ones, the rest are easier, right? The word gets around like, oh, she's doing this. I just invested here. So it follows. So that's exactly what happened and why it was very fast. Then somebody's like, oh, I have another VC that I know in Chicago. Would you talk to so-and-so? Oh, so-and-so reached out. And I was super excited back again to to my Me Too days when I was like, this is like trick or treating. And it's also like, these are incredible women, right? Like incredible mentors and supporters. But then I was like, oh, wait a second. Even though it's like once this converts and my cap was not high because it shouldn't have been high, right? Like there's barely a name to a company and an Instagram page. So I also want to be realistic. And one of my investors that I really appreciate, right? She's an African-American investor. I said, listen, I can't take any more money because I'm already going to be like, I'm almost at $1 million. I think I was at $700,000, $750,000. She was like, why don't you just double the cap and I'll invest at that new cap? And I was like, what can you do? And I had so much mentorship along the way from other Latina and non-Latina investors, Black, white, saying, maybe you stop here because this is going to mean this for you, or, and also even talking to me about the cap table I had before. So that is real. Even if you think, oh, it's a convertible note, oh, it's a safe, sure. But unless you have such an extraordinary valuation next, you will be diluted, right? Like, and so you have to be careful of how much excitement you get when you're like, okay, I'm on a roll and everybody is offering you to offer to invest. Because the thing that you don't want to do is that you're building this from scratch. You're probably making no money, which I want to go to that next. And then at the end of the day, you're left with nothing, right? Like it's nothing once you give it all away. So you have to be careful there. There's a thin line. I had no idea. Like I said, I learn every day. I had no idea you could double your cap in the middle of a race. I just talked to another friend who was like, listen, I'm doing a seed extension. I'm like, what? Is that like a bridge? No, I don't need the capital, but I'm just going to extend because I want to accelerate. I'm like, oh, I'm going to do a pre-seed extend, right? So because in my mind, I'm like, I have to hit these 20 metrics before I get to the valuation I want to get to my seed. And people are like, why don't you just do an extension and do an uncapped safe and give them a discount of 20%? I was like, what? You could do that? Anyway, so I think, the more you educate yourself, and there's so many people willing to give advice to first-time founders on dilution and how you structure things. I think it's okay to ask for help. For me, sometimes people say like, oh, why are you enrolling in that program? Like even the program at Stanford, which by the way, I adore and highly recommend to anybody, the LBAN Stanford program. you could teach that class. I'm like, no, I can't, right? Like, I don't have a business background. I could teach a class on community building, building an iconic brand, scaling a company. There's some things that I have down and some other ones that I don't.
Right.
I couldn't do a business plan from scratch myself that I start an Excel spreadsheet. I can't. And I'm very honest on the things I can do. So sometimes, it's hard to ask for help. And for me, when people have the perception of like, oh, well, she's at this level, I have a tutor now who helps me with, learning more about SPACs, right? Because I'm like, if I'm on a SPAC, I want to be able to contribute. I want to be able to represent as the only woman in this SPAC, as the only Latina, as the only woman of color. So it's okay to ask for help. It's okay to be vulnerable. It's okay to not know. Now, as women, we know more than we give ourselves credit for, right? Because we always think like, oh no, until it's perfect, I'm going to do this. We do know more. But when you feel like you have, a deficit a little bit in some area, it's okay to ask for help. There's nothing wrong with that. I do it all the time and people are shocked like, oh, what? You don't know how to read? I'm like, no. So how much would you charge me per hour to tutor me? Because I want to get up to speed. And it's okay to do that, I think.
A couple of things, because you mentioned this and I want to make sure we get to it. The founder's salary. So, it's the founder's salary and just founders are critical to fostering entrepreneurship, especially of underestimated talent. So Black Latinx talent that doesn't come from generational wealth. And we've talked about generational wealth, right? But this topic isn't talked about often. So can you shed light on how the founder salary conversation has gone down with investors for you?
Yeah, I mean that, and there's no contract, right? It feels a little like, when I used to work on TV in Mexico, and it's like it's a monopoly, and it's like, well, this is the way it is, take it or leave it, because there's a long line of people there, and you could be replaced at any moment. It feels a little like that too. In my previous venture, it was much more on the on that part. Well, there's no contract, there's no severance, there's no that, like, it's so horrifying. I'm like, why is it so founder unfriendly? They're like, well, because you're not an employee, you're the owner, and you're like, oh, okay. So you have to make the money that you probably made in high school. That's kind of like what I make now. And because the excuse is you have all the equity, right? It's like, well, you own all the equity, so you can't make more money. And you're always going to be obviously super mindful as a founder, I would hope, that you're not going to pay yourself the money that you just raised as a salary, because it's in your best interest to grow the company, because you are the majority. Hopefully you're still the majority shareholder. But there is this arrogance, right? Of like, this is the way it is, take it or leave it. And then you get these comps of like, well, look, a founder that has over 50% makes zero money. And I'm like, well, I can't make zero money. Okay, well, then you'll make whatever, the money you made in high school. Yeah. And that's just sat really badly with me, just to have to accept it, right? Because it's like, well, that's a market comp. That's how it is in VC. And I've thought a lot about this. I'm like, for me, again, I'm in a place of privilege, right? I can pull out from my savings account to live while I build this company. But whoever is not able to do that, what happens, right? Because where are those comps from where people can work for nothing? It's like same in Hollywood, right? My previous job or industry, where it's like, well, why aren't there any Latino agents? Because you barely pay the minimum wage to work the mailroom after graduating from an Ivy League school. Like, we can't afford that. Like, the system is not set up for us to succeed, right? There's not enough because they can't make that money. Or free internships. What the hell is that? Like, there's no free intern. We can't have kids in our communities do free internships. I'm so against that. But this time it sat with me less well, I guess, than last time. I think maybe because last time I was on a Series A and we're really post-revenue, post-this. So the salary was still ridiculous, right? It was like a third of what I was making before as a TV producer. But this go around in the pre-seed and you look at the numbers and it's real comps. And I can't, but you're like, who are those people? Who are those founders, that are able to work for free and build companies. So I think that has to, like, somebody's has to call this out. Like, this is not set up for our success in our community, and to just have to stomach it of like, well, that's what it is, because look at the comps. You know, there's 500 people that take no salary because they own all the equity, or that they take pretty much a stipend. It's not cool. So yeah, I'm going to be a bit more vocal about that in the near future, because that's one of those systems that is not set up for our communities, right?
Yeah.
Who
and
can
I'm
afford
all
to do
about
that?
I can't.
None of us. I mean, I'm saying, like, I mean, so I have to take out of like my but if you don't have savings, then you can't be a founder. Even if you have an incredible idea, even if you could have been the next unicorn, you can't afford to do that, right? Or unless this is only your side hustle and you still have to have a real job. But already you're starting the race from so behind than everybody else. It's completely unfair and unrealistic, right? And as you know, you can't do a startup and not work 18-hour days. So what time are you doing that side hustle that pays you the money to survive and to contribute to your family? And I don't know, you know? So anyway, we gotta look more into that.
Yeah. And I do want to ask this clarifying question that I see in the chat. Andrea Clinton says, did I understand Beatriz correctly? Founders of a company cannot have a salary or pay themselves with the funds they raise for the company?
No. You can, but it's very little. Okay. Yeah. So there's, it's almost like we call it in Spanish, a tabulador, like a chart that they have. Yeah. And then they'll be like, are you a co-founder? Yes. Are you the CEO? Or whatever you are. You could be the CEO, you could be the COO, you could be, how much equity do you have? So the more you own in the company, the less they want you to get paid, because they're like, well, you have the equity. You're like, yeah, but I don't live off of equity. That's not, you know, like, it's in paper, right? Like, it looks good on paper. So you're able to pay yourself, but it's very, very little. Well, maybe it's not little for some other people that can afford to live with a salary. Like, I'm not a 20-year-old founder. You know, I have kids going to college. I am a caregiver of my mother. You know, I can't survive on whatever that salary says once I put in my equity and the answer is, well, that's what it is. And then the contracts are the same. There's no contract. You know, it's at will. We terminate you at any time. You know, you won't vest. You do this for no reason. You know, like, how could you terminate me for no reason? Yeah, that's how it is in venture. You know, take it or leave it. These are the contracts. And nobody questions it, which is crazy. I've tried to fight it, but I have not been successful enough.
And that's why it's important to know who's on your board, to go back to that first point, right?
Yeah.
Your investors matter. Who's on your board matters. You have to be very diligent and careful about those decisions, even when they're offering you a ton of money. The other point you mentioned that I want to go back to is, you know, you were talking about safes and convertible notes, and, you know, we have all of these pre-A rounds, pre-Series A bridge,
friends and family,
friends and family. So how do you know what kind of capital you need?
Oh yeah, that's super important. And I think, I mean, from this conference, I'm assuming most people are, you know, in tech. So it's very clear what capital do you need. But some people are like, listen, I want to remodel my restaurant and I need some VC capital. I'm like, no, you need a line of credit, right? And they're like, no, but if I get a line of credit, the bank will, you know, keep my business if I don't pay. I'm like, oh yeah. The venture capitals will also keep your business if you don't succeed. So it's important to know, what capital do you need? How much do you need? At what stage you are, right? Because obviously not all capital is the same. So if you are in tech, and you need to know how fast you need to accelerate something. I am being very careful now, even when people say, raise now, you've crushed your numbers, that I'm like, I don't need the capital now, right? Like, I want to wait to get to a stage where I can have a different valuation, and then I can raise. But some companies need a big injection of capital to really grow very, very fast, that bullet scaling term, where you just want to be first to market no matter what. So that's where you're like, okay, venture. And some people very quickly, they raise one series, and a few months later, they're back out raising more and raising more and raising more. But it's like a drug, right? Like, you're like, okay, now I need more and I need more. And for me, I like a hybrid of old school of, okay, I also want to look into how am I going to be profitable? How am I going to offset? And with SUMA now, for example, we don't want to be a media company, but like, oh, why are you running, campaigns for TurboTax? I'm like, you know what? I run the campaign, first of all, because it was incredibly important for our community to know how to do their taxes right this year. They gave us so many great codes for early investors, but also it's going to extend my runway, right? It was a good thing for my community because they got the information, they got the freebie from TurboTax, and I was able to extend my runway. So sometimes you make a bit of those trade-offs that's not distracting. They plugged into what we are doing already. And you're able to sort of balance it out, because if you're always dependent on the VC money, it's very stressful. As you guys know, whoever's raised capital, it takes a lot of time and it takes a lot of energy. You go through this exact same pitch over and over and over again, and you're not putting attention into your business. So it could be months. And that's why I was like, I'm going to just raise this small amount. I want to get it done in this month. Always having like a deadline works, I think, because if you leave it open-ended, people are like, oh, we'll get back to you. We're going to check it out. For me, I wanted to launch on Latina Equal Pay Day. I just wanted to make a statement on that day. So I was like, listen, I want to get it done before November 1st. I'm going to announce who my investors are on October 30th. And you let me know, in 24 hours, whatever. I mean, do your due diligence, but it was good to, and maybe you're not going to do 2 weeks, but it's always good to have sort of like a deadline to be able to just do it a little bit faster. And then the capital depends on your business, right? I mean, and on what stage you are of your business. If you are cool with just, let us just test something, and you have a few friends that are willing to invest in you, or crowdfunding, which works really, really well, go for that, right? Sometimes we don't have in our communities the privilege of like, oh, my family's going to fund me.
Exactly.
So, but there's other ways. I mean, I'm excited to see now, at least for our community, and I know for the Black community is the same, that we have like, groups like Angeles, right, out of Chicago, where
shout
you're
out
like,
to
okay,
Angeles.
great, right, which is amazing. Or groups that support women like Portfolio, who's an investor in SUMA too. So they are, much more open to, funding you at a very early stage and supporting you. And that's people like you that might see the problem that you're trying to solve.
I love that. And you alluded to this a little bit, but you raised for Series A. For SUMA, you raised for pre-seed, and you've talked a little bit about how different those experiences were. So I'll ask like a pointed question. What was important at Series A that wasn't at pre-seed, and vice versa?
Yeah, I touched a little bit about it earlier when I said that investors say, we invest in you. That made me very, very uncomfortable. But that's the truth, right? They invest in a founder's vision and passion, and like, why are you the very best person, or in their perception, you are that person that can lead this company that you have in your mind, primarily if you're at a pre-seed. Especially if you're like pre-seed, pre-product, pre-revenue, it's a big risk. So what could they be betting on but you? Right. So that's very different than when you're in a Series A. In a Series A, it's all about performance, right? Are you doubling the revenue month over month? In my case, it was like, are you doubling the views? Are you doubling the audience? Are you doubling and there's very little cuddling in a Series A to D, and the more you progress, less and less. I've been very taken back and, I unexpected really that and maybe these are the type of investors that, I don't know, if I raise a Series A, they'll be the same. I don't know. I don't know if it's a female thing. I don't know. Or it's a pre-seed thing. But they're very much into your well-being, right? Like if I say to one of there's one in particular that she asks me, how's it going? How are you doing? Was her question. And immediately I went into tell her that the company was doing amazing, right? I'm like, oh my gosh, we just crushed our year-end gold in Q1. And she's like, no, I asked, how are you doing? And I was like, what? Like no one ever in venture had asked me how I was doing, right? So first of all, I just thought, I was like, I'm fine. I'm just exhausted. But let me tell you, we just signed this. And she's like, no, go back. What was that you're exhausted? Like you can't be exhausted. Like this is a really long, let's talk about that. Do you need more resources? Do you need to hire more people? And I was like, what? Like, that was very unexpected. And like I said, I don't know if it's a pre-seed thing or it's that, female investors just
Right.
really understand that your mental health is as important as your KPIs in your company.
Yeah.
But I feel so loved and cuddled in my pre-seed with my current investors that I love it, because I've never before experienced that from A to D, which was in my previous company. But obviously, the more you grow, the more, the expectation are the metrics, right? Like, it is a business. You're not in a nonprofit world, but I've loved sort of like that mix in the early stage, where because they're placing a bet on you, they want to know that you are also doing well besides the company, because you're pretty much the company at that moment.
Yeah. I'm going to ask one more question and then I'm going to go to the Q&A because it's on fire. There's a lot of questions coming in. So, we've been talking about what I like to call this bottom-up approach, right? So what we can do at an individual level as founders or, as investors to kind of change the game. But there's a lot of data that you and I are both familiar with that, really state that I'll read one out. So according to the Center for Global Policy Solutions, 1.1 million minority-owned businesses, 9 million jobs, and $300 billion in income could be generated by fixing discriminatory lending practices, which includes the asset class of VC, right? And you and I are familiar with the Stanford data point that, in 2012, had Latino-owned businesses scaled at the same rate as their non-Latino counterparts, it would have added $1.2 trillion to the U.S. economy. Yeah. So this is an economic imperative, right? This is
it's not
a U.S. problem. It's everyone's problem.
Exactly.
So what has to happen from the top down, like at the systemic level? What's your call to action for investors, for those with wealth, for entrepreneurs, for the founders, for just the ecosystem?
I think for LPs, I want to commend them because every day I see more announcements of them investing in diverse fund managers. And I think that needs to change. That was the perfect example of what happened with my previous round. So I think there's progress there, and that is excellent. I think it's going to get fixed when there's more people like us at the top. But today, when that is still lagging, and as we know, it's more on the early rounds, funds that you're able to get that investment from people like us. I mean, I always say this, right? Like, it's like, you guys are all business people, right? You're smart business people from Ivy League schools. Follow the growth, follow the numbers, look at the math, look at the data. I always thought that when I could present with data, people would change. And the sad thing is they don't, right? And I've thought a lot about this. I think that when I go to my doctor to get a checkup and she tells me, listen, B, if you exercise more, if you meditate, if you do this, look at this research from Harvard that says you're going to live 20 years long. And I'm like, oh yeah. Do I believe the data? Yeah. Do I believe my doctor? Yeah. Do I make the change? No, because it's not painful yet for me, right? Like I'm like, all right, but yeah, that could happen, but it hasn't happened. So I feel like until somebody, right, that passed on a company from someone in our community becomes the next unicorn of color and they missed out and it really hurts them, they'll probably pay a little bit more attention, right? What are they missing out that's going to be painful enough? Change is hard, right? Like, it's not comfortable, right? Nobody wants to change if they don't need to change. It's comfortable to do business with the people you know, you like, you trust, they're like you. That's just human nature, right? But until there's a trigger, the data's there, but people are changing very, very little. I mean, listen, we're very proud at Pledge LA of the changes we've made. And I'm proud of the LA VC community. Very, very proud. We started at 2% funding of diverse founders, and we're now at 6%. Now, should be at 70 to reflect the city, but 2 to 6% in a couple of years, I'm happy with the right? Like, so there's some people who are like, okay, like I look at the data, I get it, I want to do better. Yes, introduce me to the diverse founders and companies, and I want to co-invest with these other fund managers that you trust, and you can introduce me to. but there's still a lag, right? So for the
Yeah.
ones who see it, good for them. I really hope like the returns are so extraordinary that for the ones that didn't take the time to change, didn't take the time to take those meetings, didn't take the time to look past their biases, maybe unconscious, it's gonna take some pain. And until that happens on their bottom line, I think nothing's gonna be accelerated yet, right?
Yep.
But listen, but we're on the course, right? We're just by demographics alone, I would love to see the change sooner, right? When you think, okay, maybe in 30 years that'll happen. Sure. Just by, America will never been so multicultural, and today it is, but it's just with the younger generations. But as we see, 80% of the workforce is, Black and brown. And so of the new workforce entering the work. So it's going to happen by default. I'd love to see it accelerated, not by default. So supporting, I guess, the fund managers that do exist, applauding the LPs that are funding them, applauding the VCs that are investing in diverse founders. I think all of that will help.
Yeah. And you touched on probably one of my biggest issues with the venture capital entrepreneurial ecosystem is that it's so reliant and dependent on network and social capital, which has worked to the disadvantage of our community. And I think it's such an actionable thing that they can do, and that just open up your process, right? Open up your funnel and don't be so dependent or reliant on these closed networks that have left so many people out, because you're missing out on ideas. You're missing out on great talent. You're just missing out on a huge opportunity. So thank you for also, kind of drilling that point in.
No, and I think one quick thing, because I know we want to go to Q&A and we have 5 minutes, but it's not just the responsibility of the venture capitals, right? Like for me, I am here sometimes at 2 a.m. or at 5 a.m. making those introductions. So for the very few privileged people, like you inventor, me as a founder and as a part of my community, we have if you are in that position of privilege and of power, and it is your job to open as many doors as you can for your community, because nobody else is going to do it, right? So whenever I meet a founder and they're like, oh, I see so-and-so's in your cap table, and I'm like, absolutely. And at whatever time I need to do it, to give notes on their deck, to make the introduction, to support them, because who else is there? There's so few people that can make those warm intros that they'll be like, okay, I'll take the meeting. Okay, I'll do that. If you have that privilege and that power, it's your responsibility to use it, right? And I think in our community, particularly in the Latinx community, because, others do so much better at uniting than we do. We have this scarcity mentality that there's not enough for us, that we had to do it on our own, that nobody helped us, and this anxiety that's like, well, listen, if your time's up on that board, and I know it's only 1% of us of Latinos on boards, but if your time's up, like your time's up, like you've served, open the door to the next generation and be generous with your time. People always ask me like, oh my gosh, you're so well connected and everybody loves you. And I'm like, I show up always. I show up always, right? So it's not that it's a miracle that I'm connected. It's a miracle that people will take my phone call or answer my email. I show up. I'm generous with my time as much as, and I don't do it so one day my social capital is, some way the universe is going to pay me back. I really do it from my heart. It's something that my parents instilled in me, but it's worked out really well for me. And I do think that, as Latinos, just because we've talked a lot about responsibilities on others, right? We got to unite. We got to build our own tables. We got to support one another. And we sadly don't do it enough. That's the reality.
Reminds me of a saying in Spanish that I love. It's hoy por ti, mañana por mí.
Absolutely.
And I'm like, at some point, right? At some point, we're building that culture.
And it feels great. It feels really, really, I'm as excited when I'm able to get capital for a co-fellow founder than for myself, right? It's really gives me so much energy, so much excitement. It gives you a purpose. You're like, oh my gosh, I was able to do that with a call, with an email. Like, it's incredible.
I love that. We'll ask just one question, because I know you and I both have activities after this that we have to get to.
You have a board meeting and I have another conference.
So we'll ask Marvin's question, which is pretty straightforward. How did you determine how much you needed to raise? Is that based on a formula, for example, 12 months of operating expenses? So just quickly, how did you calculate that?
Yeah. Yes. The raise that I did, I thought 12 months would be perfect. And also that I didn't have a lot of dilution, right? That potentially when it converted, it wasn't going to be over 20% because I was already at a seed state. So I was like, if it's between 10 and 15, that would be better. So that was sort of like the formula that I had. Because for me, I didn't want to have to be raising money too quickly. And more than operating expenses, it was that I could deliver on what were the milestones that I wanted
Yeah.
to hit next. So whether it was 6 months or 12 months, I wanted to hit certain milestones. So the next time I would raise, it would be at a very different valuation. So I took both things in account, and I did guesstimate that a year would give me that time, which is coming up now in October.
Amazing. Well, I hope everyone took down copious notes on all the gems that Bea just dropped on us. It's been a pleasure, Bea, to be hosting you this morning, to be interviewing
Always a
you and
pleasure to
listening to
see you,
you.
Jessica. It's exciting to see
Likewise.
you and everything that you're doing. And, hopefully people found it, useful. But, if you have any more questions, you can hit me up on LinkedIn. I'm terrible on email. Just be persistent. WhatsApp is always better. But anyway, I'm happy to, support any of you, happy to give you any more additional information. But you have incredible speakers that you've heard before and that are coming up, which I'm sure they're going to have many more insights than I did.
Amazing. Thank you, Bea, and thank you, Plug in South LA.
Yes, thank you so much for having us. Thanks, Derek, for doing this work for so many years. That is so important for our community.
Yes. Bye, everyone.